All attendees are in listen-only mode.
Welcome, and thank you for joining us for today's webinar entitled 2015's Top 10 Financial Technology Trends in Asia, brought to you by Capron Asia. My name is Paul Robinson. I'll be acting as the webinar moderator. So what lies ahead for financial technology in China and Asia in 2015? Will Bitcoin continue its rise in parallel with China's exchanges? What about the Shanghai HK Connect? It was one of the most talked about initiatives in 2014, yet could it be considered a success? And will it continue in 2015? Or maybe online payments, private banks, hedge funds, and digital currency will continue to drive change and reform. In this informative 45-minute webinar, we'll talk about all these topics and present the findings of our upcoming top 10 reports for banking and capital markets, as well as our new top 10 report looking at digital currency trends. Now, I do need to inform you that today's session is being recorded and is run in listen-only mode. However, we really want to encourage feedback and questions from you throughout the webinar. And since we always get lots of questions, we're going to get through the presentation in about 30 minutes, and then we'll spend approximately 10 or 15 minutes there in our question and answer session. So in order to facilitate this discussion, we're going to use two features of the webinar software. The first is the viewer window, where you'll see the presentation, and which I recommend maximizing now so you can see it in full screen. The second is the control panel, where you can interact with us. Now, this control panel can be opened and closed by clicking on the arrow button on the Grab tab. And in that control panel, you're welcome to submit questions and comment to our presenter. And we'll be answering as many of these as possible throughout the presentation and also at the conclusion of the webinar too. Now, our presenter today is Zenon Capron, Managing Director of Capron Asia. Zenon is joining us from Capron Asia's head office in Shanghai. And as one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, Capron Asia helps clients understand and navigate the challenges they face in a challenging region with rapidly changing business, operational, and technological environment. So with that said, and all of our housekeeping out of the way, let's get started. Zenon, please go ahead.
Thanks, Paul, and welcome everybody to the webinar. We're excited. This is our 5th annual Financial Technology Trends for China webinar that we've been doing. So we're excited to be going through this and going into our 5th year of doing this. I would preface this and add on to what Paul is saying by if you're at all connected to China now, you know that the connectivity, we should say, the internet connectivity right now with China is kind of bad. So if I break up or drop off, I'll endeavor to get back on as soon as we can, but China is blocking a lot right now, so it's a little bit more difficult when you're doing things like webinar or if you're looking at anything like Facebook or Twitter for that matter. So for today, as Paul mentioned, we want to go through the top 10 trends that we've identified for 2015. If you followed us for a couple of years on these trends, you've known that in the past we've done banking and capital markets. This year, because of our focus on digital currency and Bitcoin over the past year and a half, we've added in a digital currency trends report as well. So we are actually publishing over the course of the next week, we'll be putting out 3 top 10 trends reports looking at the various trends, the first one being the China banking trends and China capital markets trends. And then for Asia as a whole, we'll be looking at the digital currency trends. So really what today is for is to give you a basic idea of some of the things that we found. Obviously with 30 trends going through the course of a webinar would take quite a bit of time. So as in previous years, we've picked a couple of the key trends that we've identified, and we'll go through those on the webinar today. There will be a copy of the webinar slides available, so don't feel that you need to copy down all the information that's there. And then, of course, we'll be emailing you afterwards about how you can get a copy of the full report should you want that. So to start off today, we wanted to take a look at the top 10 banking trends for 2015 in China, which should just be coming up on your screen in just a second here. There's a slight delay. But as you'll be able to see for the trends on the screen, when they do come up, a lot of the trends that we're seeing in 2015 are somewhat similar to the ones that we saw in 2014. So things like private banks, China UnionPay, mobile payments, IC cards, VTMs, a lot of the trends that have happened in 2014 are still really coming to fruition in 2015. When you look at things like private banks, those were first discussed in 2013. It was over the course of 2014 that they really solidified. And then in 2015 now is when we'll see them being implemented. So the list should be showing up on the screen now or in a couple of seconds for you. But just running through these, so we feel that private banks will continue to grow. China UnionPay facing competition at home will expand abroad, and that's one of the topics that we'll be talking about on this. The future of China's mobile payments will be decided in 2015. We really feel that this is a key year for mobile payments in China. The shift to IC cards or chip and pin payment cards will be a key focus for the industry in 2015. VTMs, so video teller machines, will be important in 2015. We see banking profitability falling, community banking and small and medium branches growing, world bonds, wealth management, and foreign institutions moving away from foreign vendors. So that's one thing that's been talked a lot about in the press, as China has kind of indicated through the government and through regulations that companies and state-owned enterprises should be moving away from using foreign vendors for a lot of their IT needs, which may be of interest to several of the companies that are attending the webinar today. So to start off, we wanted to look at the second trend on the list, which was China UnionPay continuing to move abroad. So when you think about China UnionPay, if you're not familiar with it, is the main domestic payment hub or switch for any kind of card payment here in China, including payment cards, debit cards. So any kind of renminbi credit cards or payment cards, that transaction will go through China UnionPay's network. Now, the good part about being China UnionPay is that you have 1.4, 1.5 billion customers as your potential customer base. The bad part is that is your customer base, and that's what you're limited to. So what we've seen in China UnionPay doing over the past couple of years is looking at different options and different ways to expand their business. Because if you've got 100% penetration, which they do, of the Chinese market, you need to do other things. So beyond cards, you need to do, they're looking at moving into mobile payments. And then the other aspect is moving into other markets. And so the other market aspect is what we're going to talk about a little bit more today. And the interesting thing is it's not just for acceptance. So when you think about a credit card, you have the acceptance and issuance. So acceptance would be when you go to the point of sale in Paris, in London, in Singapore, and you're able to use a China UnionPay card to make a payment. So it goes across the China UnionPay network, similar to what it would do with Visa and MasterCard. The other interesting thing that's happening now is China UnionPay is actually issuing cards abroad. And that's, we'll talk about the numbers on that in just a second. So really, when China UnionPay was looking at where to expand, they took a look at where Chinese tourists were going, because those are the primary users of the China UnionPay branded cards abroad. It wasn't going to be people initially from other countries, but Chinese that were going abroad either for business or tourism purposes. So really, when you look at acceptance around the world and globally, that acceptance roughly matches up with where the Chinese tourists go. So when you look at the Asian markets in particular, acceptance in a lot of the markets is nearly 100% at the point of sale and quite large at ATMs. So when you look at places like South Korea, it's 100% at the point of sale because that's a big tourist destination for Chinese tourists. And then at the ATM, the acceptance is about 50%. So you can see this expansion has clearly followed kind of the first wave of where the Chinese tourists were going first. Interestingly enough, acceptance in other markets where Chinese tourists tend to go, like Western Europe, is surprisingly low. So when you look at places like France and Spain, ATM acceptance is only about 50%. And we don't have the exact numbers on point of sale acceptance, but we assume that it's somewhere near the 50% of the ATM acceptance as well. So it's a bit unclear as to why that's not happening for China UnionPay, but we feel that the disparate payment systems in these countries kind of inhibit the growth. And then you can also see in Africa and the Americas, those are still very much untapped and remain growth areas for China UnionPay as they expand their acceptance network globally. The other aspect of international usage of these cards is for online payment. and cross-border shopping. This is something that over the course of 2014 was a major trend in the financial industry as Chinese consumers got more used to shopping abroad. So we've seen a lot over the course of 2014, partnerships set up. Global Collect, which is a global payments network. Lufthansa, Amadeus are both, well, Lufthansa obviously an airline, and Amadeus, one of the largest travel booking sites or services globally, both accept China UnionPay payment. And probably one of the more important acceptances is Apple's App Store. And this was only a couple of months ago that they started accepting China UnionPay on the Apple App Store. So previously, if you wanted to purchase an app from the Apple App Store and you were a Chinese national, you would have to use your Visa card or your MasterCard. So if you're familiar with the way that the credit cards work in China, you can have a renminbi denominated credit card. So that just allows you to conduct renminbi transactions, typically across the China UnionPay network, or you can have what's called the dual branded dual currency card. And so that card has both branding from either Visa or MasterCard on one part and China UnionPay. So when you're in China and you're making renminbi Chinese yuan transactions, you're using China UnionPay's network when you swipe or when you type in your PIN. But when you're abroad, then you would go across Visa's network. So what's changing in that is that Visa is slowly being replaced by China UnionPay. So this cross-border shopping thing is quite big, and there's a lot of focus, especially in Shanghai with the free trade zone. Amazon is moving into the free trade zone now as well, so they'll be able to fulfill orders much quicker. So cross-border shopping is an important trend on its own, but its usage within where China UnionPay is going in the international as far as their international strategy goes, is quite interesting and very complementary. The other area that we saw a lot of usage for was study abroad. So increasingly, Chinese are sending their kids to study in the US, in the UK, either for university or for boarding school. And that tuition payment is also in high demand because they need to be able to pay to the schools. And certain schools are accepting renminbi as tuition now as well. The last part that we want to talk about China UnionPay going abroad is this idea of foreign market card issuance. So this is quite interesting. This is actually ICBC or Bank of China or China Construction Bank in Hong Kong or Singapore issuing China UnionPay credit cards. So they're actually credit cards that are branded with China UnionPay being issued in other markets. And this is a big signal that China UnionPay has very strong ambitions to actually be issuing cards in these other markets. The most obvious thing is acceptance. So you expand your acceptance network out globally. But now we're seeing that they have, as of the end of last year, 33 million cards issued globally. And that could reach, we feel it could reach 50 million in 2015. So clearly, China UnionPay's expansion, especially in the face of all the competition they're facing in China, is pretty critical. And seeing where they go in 2015 will be quite interesting as well. The other area that we wanted to touch on, and this somewhat relates to China UnionPay as well, is the future of mobile payments. Now, really, all the stars are in alignment in China right now for mobile payments. For many years, NFC standards were being debated globally and in China. Those have been settled now. China UnionPay has set up a TSM, a Trusted Service Management Network, to support mobile payments. Really, all of the things are in place for mobile payments to explode in China. And we're starting to see this. We're starting to see the edge of this. Alipay, as of last year, had 190 million users. So 190 million users were using their mobile wallet on their phone. So basically had downloaded the app onto their phone and were using that. Even I have it on my mobile phone, and I use it for buying things in stores, buying things on Taobao, or paying bills. Alipay's challenge, though, is it's very weak in proximity payments. And because the Alipay system typically eschews the China UnionPay network, but most of the point of sale terminals are on the China UnionPay network, it's very difficult for them to penetrate that network. So it's going to be interesting to see what happens with Alipay, because although they're very strong in remote payments right now, they're a little bit weak in proximity payments because their QR code offering was banned at a certain point last year, and they don't really have a play in NFC. Apple Pay, though, could be quite interesting. There's been a lot of rumors about what Apple is doing in China with Apple Pay. On Alipay now, you can use the Touch ID sensor that's on the iPhone 5s or 6s to authenticate onto Alipay. But besides that, Apple clearly has an idea of bringing Apple Pay to the market here in China. They could potentially do that with China UnionPay, and they've been in discussions to do that. China UnionPay is also looking at a solution called Android Pay. And this has never been done before. This is kind of a new implementation. It's something that's built into Android, but really hasn't been used in any commercial setting. So UnionPay is looking at Android Pay as a potential way of controlling that market and getting control of the secure element, which is something that they don't have currently. So we did a study actually in Q3 of last year, and we asked, amongst a number of different questions that we cover in our mobile payments report, about customer preferences and what their plans were for the future around mobile payments. So you can see from the chart here, we've included some of the statistics. Nearly every person we talked to out of the 1,000 people that we polled were going to buy a smartphone for the next phone. Of those, of all of those 1,000 people that we polled, 85% roughly had heard of NFC payments. Just over 50% are using the mobile payments. The top reason that they use mobile payments is for mobile shopping, but only 23% have actually used their mobile phone to make an NFC payment. So we feel that with the standards in place, this will be a big trend going forward next year, and it is potentially massive growth in the space. It will as well be interesting to see what Apple Pay does. We feel that in the first half of this year, we'll see them launch a solution into China. I think the payment, the renminbi payment on the App Store was kind of a step in that direction, but we feel that they'll continue to do that. And then UnionPay will at some point this year roll out Android Pay as well. It'll probably be a little bit later than Apple, but the groundwork is already there for NFC and mobile payments in general. So those are the two banking trends that we wanted to cover today. We wanted to move on now and talk about a couple of capital markets trends that we're seeing for 2015 as well. So on your screen now, you can see the top 10 trends that we have for capital markets. A lot of these, kind of similar to the banking side of things, were repeats from last year that are continuing to be important going forward. The two that we want to talk about today, however, are the special financial zones and the Hong Kong Shanghai Connect. And those, to a certain extent, relate to all of the other ones that are on here. When you look at QDII, when you look at RQFI, when you look at Chinese financial institutions, it's all very tightly connected. But we feel that the Hong Kong Shanghai Connect and the financial zones are really some of the more important trends that will come into play in 2015. So in particular, looking at first the financial zones. Now, the Shanghai Free Trade Zone, if you've been following that, that's been a multi-year process, and it's probably the most concerted effort that we've seen by the Chinese government on a national level, or on a buy-in from the national government on a new free trade zone. Now, if you think about the development around Shenzhen and Guangdong in the south of China, a lot of that was because of the Shenzhen Free Trade Zone that was set up in the 80s and 90s. So clearly there's a precedent for free trade zones changing the environment. And we're definitely seeing that with the Shanghai Free Trade Zone. We don't talk about it too much in this webinar or in the report actually that comes out of this, but there are a number of things that are happening in the Shanghai Free Trade Zone. Foreign entities will be allowed to operate e-commerce companies in the free trade zone. Video game companies are able to set up in the free trade zone. Mobile telecommunications providers are able to set up in that as well. Now, the interesting aspect for this as it relates to the financial industry is, I think the third point on here is probably the first. It's the Shanghai Free Trade Zone will be enlarged to include Lujiazui Financial District. So not only is this a tremendous geographical expansion from 28 to 120 square kilometers, but that zone contains virtually every financial institution in China, at least the large ones. So if you think about Bank of China, if you think about ANZ Bank, if you think about Standard Chartered, if you think about HSBC, ICBC, Bank of Shanghai, everybody is in that zone. And the government is going to enlarge the free trade zone to include that financial district. So this is a tremendous change. And this is really, if you look at some of the things that the government is doing with renminbi conversion on the banking side, the expansion of that zone to include the banking district of Lujiazui will be a will really change the game. In addition to that, major brokerages are in, obviously, Lujiazui, as well as having set up branches in the free trade zone. So they're obviously seeing opportunities there. And as of 1 year from the start, there were almost 2,200 investment and asset management companies that had set up in the free trade zone. So clearly they're seeing it as a huge opportunity. One of the last things and more recent things that just happened was the Shanghai Gold Exchange International Board. So this was set up in the free trade zone, and this is the first time that foreign investors can actually trade gold in China. So now you can see at the bottom here, these are the 4 exchanges that are housed within the free trade zone. And in theory, once that expands to include Lujiazui, then the Shanghai Stock Exchange will also be in there as well. So it'll be interesting to see how that plays out in 2015. Not to be outdone, Shanghai is still on the radar as well. Now, we talked about Shanghai last year and the previous year when we were talking about the hedge fund zone and hedge funds in China. That is still a focus. Shanghai lost a little bit of momentum over the course of last year, and we feel a bit supplanted by the Shanghai Free Trade Zone. But that should pick up again in 2015. There was some reform that the government pushed through in October of 2014, and then we should see more over the course of 2015 as more companies move in there and policies are loosened more on the capital markets side than the banking side. So banking will be largely more focused on the Shanghai Free Trade Zone, but Shanghai will have an element of both, but more on the capital markets side. So that was the first trend that we wanted to talk about in the capital market space. The second trend, and probably the more interesting trend and the more recent trend for sure, is the Hong Kong Shanghai Connect. So if you're familiar with this is the Connect that was put in place towards the end of last year and launched in October of last year that allowed Hong Kong traders to trade mainland A shares and mainland traders to trade Hong Kong H shares. So what's called northbound and southbound trading. And previously, this was only possible through either the QDII program or the QFI program, and typically only through funds. So the large investment houses would set up funds. This is actually allowing for retail investment across borders. So it's quite interesting. The Shanghai Connect was first discussed in April of 2014, and there was a lot of preparation that went into it. So as we talked to people in the time between April and October when it was eventually launched, there were a lot of complaints, even from companies as far away as Australia. They were complaining about the talent that was flowing to Hong Kong and China, because there was a clear focus, and a lot of the brokerages and technology companies saw that as a really big opportunity, as to something that would really change the market. Successful launch on November 17th. The media hype helped to drive demand, although there were some issues that remained unclarified. So, the example of prepaid delivery is still a little bit up in the air. Investors going northbound used the entire daily cap on the first day. So there is a daily limit on the amount that can be traded northbound or southbound, as well as an aggregate limit. So an overall kind of umbrella limit. But only 17% of the trading went southbound. Now, if you look at what the government's kind of reasons for setting up this Hong Kong Shanghai Connect are, it's obviously to open up markets, but as well, it was really to spur what was happening in mainland markets. So if you've been following the Shanghai A-share market over the past couple of years, it hasn't been that exciting up until earlier this year. And, earlier last year in April, when the Hong Kong Shanghai Connect first started being talked about, that's when you first started seeing activity in the A-share market in China. So there was really a drive at that point that companies wanted to get on board with this because they saw a tremendous opportunity, and so did the retail investors. And that's really, when you look at what's been happening in the A-share market over the past 6 months of last year, from July to December, you see on the screen, it's a 44% rally. Now, keeping this in mind, this still is not the same growth that we saw going up to 2007, 2008. That was about a 500% rally. So there's still In theory, there's still more that could happen with this, but we've seen a lot of ups and downs over the past couple of weeks with this Hong Kong Shanghai Connect, and whether it's actually driving traffic for the Shanghai A shares or not. But in our feeling, it's too early to decide if it's successful or not. It's still very early days. We are quite bullish on the Hong Kong Shanghai Connect. We feel that it is a step in the right direction of opening up capital markets to foreign investors, both inbound and outbound from China. But it is also offers new investment opportunities. I mean, China announced growth a couple of days ago that, while is the lowest that China has had in decades, it's still the envy of many other countries. So, any country that's doing 7% growth is much better than a lot of what else is out there. So we feel that there are still some issues in place, but the fundamentals are still there. There's a lot of political will to make this project a success. The Chinese capital markets are attractive for diversification and growth potential. Institutional investors are getting more and more on board, and we feel that trading volume will grow gradually. So now we've had a chance to look through what we see as the top 10 trends in banking for 2015, the top 10 trends in capital markets. And as I mentioned at the beginning, we've added digital currency trends for 2015. So these are actually, it says top 10 China digital currency trends for 2015. This is actually for Asia as a whole. So a lot of these things you might be able to predict. Digital currency prices will remain volatile. Investment will continue into digital currency firms. But there are a couple of things that we want to talk about on the webinar and really call out in the report that we talk in a little bit more detail. The two that we wanted to talk about today, the first is virtual currency will struggle at the checkout. And that's trend number 3 on the list. And then trend number 6, overall regulation in Asia will not be positive for digital currencies. So let's talk about the checkout first. Now, when you think about making mobile payments or making any kind of payments at the checkout, typically, as long as there's no fee involved, which for a person, for the consumer, there's typically not a fee involved for any kind of payment mechanism that you make at the point of sale or at a merchant, you want to go with the thing that's the quickest. So when I'm in the US and I swipe my card at the Starbucks, if it's under $25, it just goes through. I don't even have to sign. That for me is easier than cash. Now, if I have to swipe, if I have to put in a code, if I have to make a signature, it makes it more difficult. And in that case, I'd rather use cash. That's really the point that we're hitting with digital currencies and the checkout process, is that it's not as convenient than what's already there. In addition to convenience, the other aspect is the fitting for the nature of the consumers. One of the things that's been tremendously successful here in China is Alipay, and then the screenshot on the right is of WeChat from Tencent and their wallet. So there's a My Wallet on your WeChat, and you can do anything from using wealth management, ordering a taxi, sending lucky money, doing group buying, sending money to friends, topping up your mobile phone. This platform has been tremendously successful in China. One, because it's very easy to use, and two, because it integrates into what people are already using. So if you're not familiar with WeChat, it's very similar to WhatsApp or Line or Kakao, I believe is the Korean variant. But it's more tailored towards the Chinese consumers. So there's things where you can share photos, you can chat with friends. So what Tencent has done is built this financial functionality into that. And this is where digital currencies aren't getting traction, because they're not built into anything else. One of the benefits of a company like Tencent is that they have everything there. So they have the financial aspect, they have the wallet, they have the WeChat platform. Digital currencies, by their nature, are very decentralized. So everybody's working towards a common goal, but nobody's coordinated in getting there. Whereas if you look at Apple, when they've launched Apple Pay, when you look at Tencent, when they've launched the wallet on WeChat, it's coordinated because the entire company is behind one strategy. So that's one of the challenges for Bitcoin and other currencies at the point of sale. And the other thing is digital currencies are essentially searching for a killer app that We don't know what it is yet. So it's a solution looking for a need. If you look at what Apple did with the iPhone, Apple essentially created an entirely new market, or what they redid with the iPad. Nobody knew that they needed a phone or a tablet PC or a tablet computer. Nobody had known about tablet computers before that, but they created that market, and they created something that was just so compelling that it created a new market. So, do we need to change what's already happening at the checkout? The model of is there something there that needs to be fixed? Not really. And when we look more specifically at China, look at merchant fees are very low using China UnionPay cards. So the average merchant fee for a merchant is anywhere between 0.5 to 2% in China. That's the total fee that they would pay for the issuing bank, the acquiring bank, and the China UnionPay fees. So the fees are very low. Security and privacy isn't really a concern for users as far as we found. Real-time domestic payments are through banks or third-party platforms. And digital currency exists on its own. It's not tied into these social platforms. So increasingly, as we're seeing people move away from using cards, they're moving on to Alipay. They're using mobile payments. And the last point is it fails what I call the mother test. So the mother test, I define this as, could my own mother use this technology? Does she feel it compelling enough to use something different than what she's already using? Because realistically, that's the person that we have to capture in this. We have to capture the average person, not the person that's technology savvy. Probably the people on this call would be very comfortable using Bitcoin. It's people like my mother who are not very technical savvy, that are used to using credit cards or using cash. How can we convert them to using Bitcoin or digital currencies? Now we're hitting half an hour on the webinar right now. I've just got a couple of slides left, and then we'll get to questions. I see there are a couple of questions coming in the background. But the last thing I wanted to talk about with digital currencies is that overall regulation in Asia will not be positive for digital currency. So when you think about digital currency, just by the very nature that it's decentralized, it comes unregulated, which has its positives and negatives. I mean, the positive is that there's no constraints in what it can do. So Bitcoin can be sent anywhere in the world to anybody in the world at any time. The bad part about it is there's no recourse. There's no legal recourse. I had some trouble a couple weeks ago in a service that was providing Bitcoin, and they're not regulated. So what can I do if I have problems? And I lost a little bit of money in a transaction. There's nothing I could do to get it back because there wasn't regulation behind that. We feel that there's a lot of people that talk about regulation for Bitcoin or other digital currencies as being bad. So just by the very nature of trying to limit it, it's bad. But as much as people say that, we as humans seem to dislike the idea of regulation, but we like the comfort that it brings. So, the bank failures in 2006 to 2008, those were horrible. And the banks were on the line for trillions of dollars that were lost in the marketplace. We still use banks, even though there are questions about the trust of the banks and if they're aligned with our goals, if their goals are aligned with our goals, but we still use the banks. And, as much as humans like the idea of something that's free market and not regulated, some of that is kind of necessary in this space. So, the feeling is that if something is regulated, it's legitimized and people feel more comfortable with it. And Bitcoin, we feel, inevitably will need to be regulated. Now, if you followed regulation with Bitcoin, of course, across the world, there has been regulation that's been in place. I mean, if you look at Asia by itself from 2013 to 2014, in China, Bitcoin is not illegal, but banks can't be involved. In Hong Kong and Singapore, it's essentially regulated as a commodity. In Southeast Asia, there's kind of shoot from the hip responses. So at one point, it was illegal in Thailand. At one point, it was illegal in Vietnam. And then at other points, it was legal. So there was kind of a mishmash of responses there. What we have noticed is that most jurisdictions right now feel satisfied with the current level of regulation that they have. So when you look at what's happening in China, there's talk about, well, will the government in China regulate more? We kind of feel that the government is happy with the way things are right now. So we're unlikely to see other markets besides the US lead regulation in cryptocurrency in 2015. So in other words, that's saying that all of these countries that have put regulations out in place are kind of happy with where they are and happy with the status quo that it's gotten to. That will change if Bitcoin all of a sudden takes off. If there's a big problem, a big crash that threatens people to lose their money, or if the U.S. changes on their regulation, that will probably lead the rest of the markets. So right before we get on to questions, I just wanted to give a quick summary. It's very trite to say, but 2015 will be a year of great change. If we look at the banking market, if we look at the banking market in China, capital markets in China, and with the Hong Kong Shanghai Connect, and digital currencies across Asia, there will be no shortage of information over the course of 2015. Very much in China, it will still be this concept of crossing the river by feeling the stones, so the path to reform. Moving forward, the regulators will take small steps, see how that works, and then take bigger steps as they go. Banking in China will be nearly unrecognizable by the end of 2015. A couple of days ago, Tencent's WeBank launched. Within a couple of months, we expect Alibaba's Ant Financial, MyBank to launch. They are going to revolutionize the way that the average retail consumer interacts with their bank, and we feel that over the course of 2015, these private banks will completely change the way that we look at banking in China. Likewise with mobile payments, China will drive NFC adoption with their mobile payments initiatives, whether it be China UnionPay, Apple Pay, Android Pay. These solutions, are coming at the perfect time, the perfect storm, the perfect alignment of the stars, whatever you want to call it, that it's going to change the market. And the Chinese consumers have become so used to using their mobile phone for every social activity, for every payment activity. Even myself, I rarely pay somebody in cash these days. I don't use a card either. I use my phone. And that's how much it's changing. Capital markets in and out of China, in particular the Hong Kong Shanghai Connect, will continue to be important going forward and will continue to expand. And digital currency development will continue, but adoption of digital currency will struggle. So we'll still see challenges with that as digital currency kind of tries to find its place in the world. Just wanted to, before I turn it back to Paul, I just wanted to give you notice a couple of the recent reports and a couple of the upcoming reports that we have. If you missed them, we had two reports towards the end of 2014, peer-to-peer lending in China and China moving abroad. The peer-to-peer lending report was very well received. It takes a look at what's arguably one of the hottest sectors in the online finance space in China right now. And the China Moving Abroad report was looking at the various different ways that Chinese nationals use to get their money out of China. We also have two upcoming reports that we've done in collaboration with Equinix, looking at trading in Japan and trading in Australia, as well as a refresh of trading in China, which is a report that we did a couple of years ago, but have refreshed it for 2015. So please take a look out for those. Those will be up on the website. And if you're subscribed to our newsletter, you'll see them on there as well. So with that, I want to hand it back to Paul. There have been a couple of questions in the background as I've been talking. So maybe, Paul, you can walk us through some of those.
Okay, I definitely will. Thank you very much, Zenon, for that great information. There's a lot of information in there, and we'll explain how people can get more of that information here in a moment as well. So as you mentioned, there's been a lot of questions coming in. Let's go through a couple of them. I'm sure we're not going to get a chance to finish them all before we hit the quarter to the hour. Let's start with the first one, and this is actually going to be a bit of a combination. There's a question on the question answer from Michael that talks about the published date for the Shanghai Free Trade Zone. And there's another question from Jackie, which is along the same lines, which is, isn't the Shanghai Free Trade Zone more of a 2014 trend, and why does it matter in 2015? So a bit of a double-barrel one there. If you can give it a shot, Zenon.
Sure. So the date, I believe the date is it's in the first half of 2015 that it's going to be expanded to include Lujia's Way. So I believe it's March, but I'll double check on that and we'll send that out in the details after the webinar. It's still an important trend in 2014, strictly for that reason, because all of a sudden this free trade zone that was meant to be a test bed in a corner of Shanghai has expanded to include one of the largest, well, the most important financial center in mainland China, certainly, and represents, trillions and trillions of dollars of money in renminbi that's moving around. So so that's why it's this is something that just came up in the end of 2014, and it caught, I think, a lot of people unaware. Our speculation on the free trade zone was that they would continue to expand or continue to loosen the regulations in the free trade zone itself as it existed previously, and then gradually roll those out to to other markets in China, potentially rolling it out to Shanghai at the latest. But what the government seems to be saying is, hey, look, we've tried this and we've tested this in the smaller area. Now we're going to roll it out big time, and that's why this is one of those trends that really spans both years. And I think 2015 could be even larger for the free trade zone than it was in 2014.
Okay, thank you very much for that one. All right, let's see this question from Helen, and it's a bit of a long one, but let's see how we go. So it says, regarding or on the private banks, there was a piece of news yesterday about how China may abolish the VIE structure, and how will that affect Alibaba's ability to push through with their bank? And in addition, she's asked, also, will the Alibaba dispute over Tianhong Asset Management affect things as well?
Yeah, that's a really good and timely question. So if I'm not sure how many people are familiar with the idea of VIEs, but it's a variable interest entity, and basically there are certain markets in China that only Chinese companies can operate in. So e-commerce is one of those. So technically, Alibaba is, at its heart, it's a Chinese company, but for its listing, it had to go through what was called the VIE structure. And so this is, a lot of people have pointed to these structures as being relatively tenuous. So one of the criticisms of the Alibaba IPO is that you don't actually own the end company. You own part of this variable interest entity that is then kind of loosely through contracts is allowed a certain amount of revenue from the actual Chinese company itself. If you look at Baidu, if you look at Sina, if you look at a lot of the companies that have listed abroad, this is the way they've chosen to list, and this is the case for Alibaba as well. Now, the news yesterday was that VIEs may no longer be allowed. Now, this is, if you read that just the way it sounds very bad. But actually what we believe is going to happen is that e-commerce companies through the free trade zone will be allowed to be set up in China. So a lot of these companies that are listed abroad, like Baidu, like Alibaba, like Sina, will be able to transition to a new structure where they no longer need to use a VIE structure. It's very unrealistic that the government would completely shut down the VIE structure right now, is because there's so much capital and there's so much political capital, for lack of a better word, political capital that's tied up in these companies as well. I mean, there was a lot that went on behind the scenes to pull off that Alibaba IPO. They can't all of a sudden say that it's just not going to work. I mean, those are the same feedback that we had for criticism that people had of the VIE structure in the first place for Alibaba, is that it can't, the government wouldn't just be able to shut that down. It would be the implications would be too large for something like that. So we feel that the VIE structure and what there was talked about yesterday won't really impact Alibaba or any of the other companies' ability to set up these private banks. Firstly, because we don't feel that it's going to change. Secondly, Alibaba's private bank will actually be run through Ant Financial. So that's the local company that holds Alipay as well. So a lot of the financial entity and the aspects of Yuebao are going through that entity rather than the Alibaba, the top entity. So even if the VIE structure was null and void, the private banks would still continue to be a viable option, because they exist through that completely Chinese company called Ant Financial.
All right. Thank you very much, Zen, for that one. All right. Looks like we've got time for just one more before we get that quarter to the hour mark. So this one might be a pretty simple one for you as well. I think this one comes from Cedric, and he asks, on China UnionPay and their China monopoly, is it realistic that MasterCard and Visa will actually get China operating licenses in 2015?
Yeah, that's a good question, Cedric. So towards the end of last year, there was an announcement that the government would allow foreign entities to set up card clearing operations in China. So card settlement, card clearing, essentially payment networks for cards in China. So if you think about that, that includes companies like Discover, American Express, Visa, MasterCard. For years, they've been essentially locked out of the market by the regulators and by China UnionPay. So China UnionPay has had a lock on renminbi transactions on the mainland. Now, that being said, if I take my US Visa card and I go to the Apple store here in Shanghai and I swipe it, I can buy whatever I want because Apple accepts Visa, and it doesn't matter if it's a Chinese Visa card or if it's a foreign Visa card, that transaction will still be processed, but that will be converted immediately from renminbi to US dollars and then across to my bank in US dollars. Similarly, like if you were buying a Coke in France or a book in London, the transaction would initially be made in pounds or euros and then converted back to local currency. Now, what is being talked about now is the opportunity for these foreign companies to actually come in and clear renminbi transactions in mainland China. The initial scuttlebutt or the initial rumors about this was that it would happen in the first half of 2015. We see there being more talk about this in 2015, but realistically, we don't see the market opening up to foreign competitors until 2016, at least truly open up. There may be some steps moving in that direction, but it will be a while before that market is completely open. Firstly, because China UnionPay, it sounds strange to say, but needs time to prepare because they have a monopoly on what's happening right now. And the infrastructure, to be quite honest, just isn't there. And this is something that we'll be looking at in the next month or so is, could China actually be profitable for these companies? Because it's unclear whether Visa could actually turn a profit during the first few years that they're in China anyways, going from essentially no infrastructure to a fully fledged card clearing renminbi payment processor. And that's still very much up in the air as well. So we'll be looking at that at one of our commentaries or reports in the next month or so.
Okay, thank you very much. Well, we've hit that 1:45 mark, so unfortunately we're unable to get to answer all the questions that were being submitted in our webinar today, but as we mentioned earlier, we have actually been busy answering many of those in the background, and we'll get back to you individually if we haven't got a chance to get back to you during this question and answer session. As Zenon mentioned during the session today, the discussion was based on Capron Asia's upcoming top 10 reports, which focused on banking and capital markets, as well as their new top 10 report looking at digital currency trends. Plus, we also talked about 3 additional reports, the first one being the 2015 top 10 trends in China banking technology, along with the 2015 top 10 trends in China capital markets technology, and finally, the 2015 top 10 trends in Asia digital currency technology. All of these which will be available as part of Capron Asia's subscription service, or even available as individual reports. So if you haven't already registered for this valuable service, we'll be providing a link to that in the email you'll shortly receive thanking you for your attendance here today. And in that email, we'll also put a link to the recording we've been making, so that way if there's any information you missed, or if you want to listen again at your own pace, you definitely can. Well, once again, Capron Asia appreciates your time today and hopes you found the information informative and helpful. Appreciate your time here today, Zen.